Well, welcome everybody. My name is David, and today I get to be your moderator for this exciting webinar on marketing for purchase loans. I know that each and every one of you are excited to join us for this thrilling webinar on all these different marketing strategies we're going to share today on how to really rein in the purchase business. This is a hot mortgage niche for a lot of individuals that are done with the refi marketing, and they're still maybe doing some, but they're looking for that next big wave of opportunity, and you're going to hear from a couple of expert panelists today, especially on Mortgagee Letter 2013-26, on all the different things that HUD is doing to make this opportunity a reality for future or previously unqualified borrowers to jump into the housing game once again. So let's go ahead and jump in. My first panelist today is a man by the name of Jeff Bush. He is the president of OverflowWorks.com. He's got 20 years of direct marketing experience and over $1 billion for over 1 billion pieces of direct mail mailed for the mortgage industry. So you're going to hear from one of the heroes of the direct mail industry for specifically the mortgage niche. He also has a unique background where he actually came out of the mortgage banking world. He actually has been very successful doing home mortgages in a retail branch and actually owned a mortgage company that closed over 5,000 loans between 2000 and 2007. So he's a gamer. He knows how to do it. He's going to share all his insider secrets today. And I just wanted to say thank you to Jeff for showing up today.
Yeah, thanks for having me on the call, Dave.
Well, let's just go ahead and jump right into it, everybody, and really start talking about what our agenda is today. The first thing we're going to talk about is we're going to get one of our expert panelists to give us an overview of Mortgagee Letter 2013-26, and then we're going to get into the nitty-gritty of the marketing strategies targeting specifically purchase loans. And then we're going to talk a little bit more about the 2 million or more buyers that just got dumped into the market with this new upcoming announcement. So let's go ahead and introduce Annie Gotch. Annie is a AVP, Wholesale Branch Manager for PRMG. Many of you have heard the name of PRMG, and she's one of the superstars, been around the industry for a long time, started when she was about 11, and now she's got all this experience underneath her belt. And Annie, it's just a pleasure to have you on the webinar today.
Oh, well, thank you, David. Thank you for having me.
Well, the first thing we're going to do is we're going to ask Jeff a little bit more about why he's hosting this webinar and why he's brought in this exclusive expertise from Annie Gotch. Jeff, do you want to expand on that a little further?
Yeah, so we've had a big change in the mortgage business over the last 90 days. I mean, obviously, interest rates went up a full point, and a lot of my clients that I've been doing refinance direct mail for over the last couple years for HARP, FHA, VA, Streamlines, all the different direct mail that I do, it's all somewhat rate sensitive. So a lot of my clients have said, Jeff, we need purchase loans. How do we go after purchases? And we're definitely moving into that market, if not already there. So, I guess just a new concept of doing direct marketing to get buyers in the door and fund loans and, keep increasing or keeping business up with the rates, jumping, and that's the main reason.
Great. Well, let's talk to Annie a little bit more about Mortgagee Letter 2013-26. And Annie, why don't you give a little bit of background of your expertise in the mortgage industry, working in the wholesale retail markets, and then let's just jump in and talk about the power of what this new release from HUD is giving mortgage professionals around the country.
Okay, PRMG has been in business since September of 2001. I'm actually one of the original employees with the company. I've been in the business for 32 years, and I've seen a lot of really good programs come and go. This Back to Work initiative is actually one of the most dynamic programs that HUD's come out with to date, although it is also putting very specific borrowers into this box. The basis of this program is weighed heavily on the ability to document a strong case for an economic event in a borrower's life. And how HUD defines an economic event is a loss of employment, a loss of income, or a combination of both. That can be having somebody be laid off, having someone have reduced hours, overtime, and something as simple as that. It is documenting that the borrower has this loss of employment of at least, or loss of income, for at least 20% or more for a period of at least 6 months. There's some very specific things that have to be relayed to HUD in this program in order to do it. to me, one of the most critical things that is not widely known is that the borrower has to complete home buyer counseling prior to signing the application and going into contract on a home. So it's really critical that a broker know all of the details of the program and consult with their client prior to them going to shop for a home. This actually comes in really handy as we have created a checklist that the broker can use to go over the details with the client to see if they fit. And if they fit, then they have them do their home buyer counseling, and then they go to shop.
We're showing a copy of that back-to-work checklist, and we're going to email that out to all of the registered participants for this webinar. So those of you that are asking via the GoToWebinar chat panel, just let you know that we are going to send you a copy of this presentation as well as the documentation that Annie's talking about. Now, Annie, before we throw it over to Jeff to talk about how to market to this particular niche, you put together a nice back-to-work initiative overview. Talk a little bit about this. I'm just going to show some of the screenshots of this particular document, but what's inside this overview document that you prepared?
Well, it does start with the overview of the program and explains what an economic event is and goes into detail what HUD is looking for. It also explains what the borrower's household income should be defined as, and that is all household members. Talks about, again, the basis of the program is that we have to actually document the loss of income, or what HUD calls the economic event. I have actually had a broker email me last week on something like this and said, well, the borrower went through a divorce a year and a half ago, and to him that was a big economic event, and it is, but not for purposes of this program. They also talk about the borrower has completed satisfactory housing counseling, but again, that is prior to entering into contract. This back-to-work initiative document is basically combining all of HUD's information into one easy-to-read 3-page document. It also talks about credit on the next screen, I believe. Credit, talking about no late payments in the last 12 months. The other critical thing in this program is that the borrower has to have 1 year passed since that economic event. And in that 12 months, they have to have excellent credit, and that has to be documented by a VOR. It tells you what you need in here, and it also tells you that you have to show 12-month satisfactory payments, no late, and that before the economic event, you have good credit. So again, it's very specific in putting this one borrower who might have been laid off from a long-time job into this box and saying, during this period of time for at least 6 months, I struggled due to an economic event, due to job loss or reduction in hours.
Now, we're not going to cover all the details about this particular product, Annie, but in terms of your expertise and what you've seen in the mortgage business, I know that there's some that are a little bit hesitant to jump into this because they're just not understanding it. But if you were a mortgage originator today or you owned a mortgage company, would you just be all over this and marketing it, or what?
You know, I actually would, and I would probably try and target those borrowers that were affected by this, that I know were affected by this. Many large companies had layoffs, and now they're hiring back. And remember, a borrower doesn't need to go back into the same company. They could have gotten a job with a different company. So I would definitely be marketing this program because you have a borrower that is struggling, that needs help. It is your opportunity to educate them and bring them in and try and help them. And if they don't fit into this box where you can get them into something within 1 year of a short sale or a deed in lieu, which this program allows, then they are your customer now and you've helped them, and maybe you can help them when they are seasoned if they don't fit into this box. That would be my thoughts on that.
That's great. Well, stay tuned because we're going to bring Annie back in to answer some additional questions here towards the ending part of the webinar. But we're going to get into the specific strategies, the marketing strategies that are going to be able to help target these candidates, the high qualified borrowers that are out there, and to bring them to you, to make your phones ring and to make your organization really thrive. And we're going to do that in just a moment. We're going to bring Jeff back in. Right now I've got a poll up. If everybody can go ahead and cast their vote, I'm going to go ahead and close that poll up in about 10 seconds. And while everybody's voting, I'm going to go ahead and bring back Jeff Bush and have him talk a little bit more about some of the data that's available for this particular niche that is out there and how you can begin to leverage it. Jeff, talk to us a little bit more about how that.
So Dave, as far as a targeted list to mail people that qualify for this program, the best list we could come up with is people who discharged a Chapter 7 bankruptcy in the last, 12 to 24 or 12 to 36 months. Previously these people have been told they cannot buy a home until possibly 7 years after the bankruptcy for conventional, or 2 to 3 years after the bankruptcy discharge date for an FHA loan. But now that this program's out, that bankruptcy, is definitely an economic event that qualifies them for this program. They still have to qualify for income, but I just think it's a great list of people to market to. There's a lot of people in America that had bankruptcies because their income dropped. There's a ton of people with short sales and foreclosures that also had a bankruptcy. So you're basically marketing, discharge bankruptcies that happened in the last 12 to 36 months, but you're also going to be mailing people with short sales and foreclosures. And the message is basically, hey, you can buy a house 12 months after this economic event. Call me to shop for a home. And we've had a great response on this, and it's just a great way to get some purchase loans in that aren't real rate sensitive.
Well, we do have a couple of different strategic letters that you've designed, and while there may be some of your competitors that are on today's webinar, I know that you've blocked out the names of your clients, but these are actual letters that you're using in your market. And just go ahead and walk us through these different marketing letters and point out what has been the major the major response factors and why these particular letters have been successful, and just give us a little bit more background of what's working out there in the market. I'll go ahead and show those letters now.
So the most important part of a success of a direct mail campaign is always the list and the offer. And it's really the combination of the two things that make it. Everyone talks about getting a great list, but the offer is just as important. So this was a mailing that we did. This particular mailing just went to people that were renting homes a couple months ago, and told them, hey, after a short sale bankruptcy foreclosure, here's what it looks like for you to be able to buy a home again. Here's the waiting period for conventional, FHA, VA, home path, and USDA loans. And this mailing actually went out before Back to Work actually came out, so all this information is no longer even valid that they have to wait 2 years after their discharge date to purchase a home on FHA. It's funny, some of my loan officers and mortgage companies that have been mailing these letters tell me that they're getting calls from realtors that had short sale foreclosure bankruptcy and helping realtors buy homes that didn't even know about this program. So these are just a couple sample letters. Now this one is specifically mailed to 12-month-old bankruptcies. So a real simple letter at the top. We're helping our clients with 12-month-old bankruptcies, foreclosures or short sales, purchase homes with only 3.5% down. So there's our message. There's our great offer mailed to a great list that makes these mailers work. And then we go through some details about, qualifying for the program and why they should call. This is another letter that we're showing. FHA reduced the waiting period to only 12 months to fund a loan, 3.5% down. Even if you had a recent bankruptcy, call us. We can help you buy a house and get financing. Pretty simple letter. The outside panel, it's a home purchase offer. It's a government loan. That kind of gets this thing opened and gets some response. So real simple letters, but a great list and a great offer. That's what makes it work. It looks like we've got up here. So we have the option of mailing, bankruptcy discharges, let's say 12 to 24 months or 12 to 48 months. We can pick the month of the discharge date so that you don't put all your mailing into one particular category, back to work. If you're nervous about the back to work program because it is new and you don't have experience funding these loans, maybe we don't put 100% of your advertising investment into just 12-month-old bankruptcies. We can mail people with bankruptcies 1 to 4 years, so part of the loans will be back to work, but part of them will be traditional FHA loans that you're more comfortable funding. The other option is to stay away from bankruptcies because those are going to be tougher deals. You've got FICO scores, you've got income, there's other qualifications. We're having a lot of success on it, but some of my clients are like, Jeff, I just want to mail renters. So here's a count for people renting homes, in America. There's 18 million of them. We can put some income selects on these lists. You can pick zip codes around your office or around your real estate agent's offices, so you're mailing right there in your market area. We can target people renting single-family residences and screen out people renting apartments, thinking that if you're renting a home, you're probably paying more in rent. You had to come up with first and last month's deposit, so you probably have a little bit of money to put down. A little bit better quality borrower, possibly, not for sure, but single-family residents or people renting apartments, so we can divide that up and mail, a few different segments of this list to really try, the best of all three.
I'm going to go ahead and throw up a poll right now, but I want Jeff to come back in and just talk about, how he's being able to help some of his clients to really go out there and market to real estate agents, but be doing it from a power position where you're actually generating referrals or generating opportunities for the real estate agents, and just talk about how those synergy partners work. And then I want to have Jeff just talk about, the specifics of, what kind of volume would you have to mail out in terms of these letters to close an extra 5 to 10 deals a month? I mean, what kind of investment are we looking at? So I'm going to go ahead and keep this poll open. If you've stranded away from your computer, come back to your screen, come back to this particular presentation, cast your vote, and then I'll bring Jeff on in just the next 5 seconds or so. Thanks, everybody, for participating. And if you do have a question and you want to ask Jeff or Annie a marketing or a mortgage-specific guideline program question, go ahead and cast your questions in the GoToWebinar control panel up there in the right-hand corner of your screen, and we'll go ahead and ask those questions in the order in which they're received. And we'll do a little Q&A session as we roll up today's presentation. All right, thanks, everybody, for participating. Last votes, go ahead and get those in, and then I'll go ahead and bring back Jeff.
So, Dave, the question about, how many pieces do you have to mail, how much money do you have to spend to try this thing and see if it's going to work? I mean, there's a big price point on direct mail at 10,000 mailers. So on this particular bankruptcy discharge list, 10,000 mailers is like $6,500. For $6,500, that includes postage, printing, data. When we mail 10,000 letters out, we've had anywhere between 50 and 100 inbound phone calls. So that's a 0.5% to 1% response. So I think anywhere in the nation, I'm going to be able to get, an average of 75 inbound phone calls on a 10,000 piece mailing. And you can mail 5,000 this week and wait a couple weeks and mail the other 5,000. So you're not taking all the calls in the same week. But my clients are telling me, listen, Jeff, out of 75 inbound phone calls, half of them don't qualify because of, income or FICO score. But the other half that do qualify, we've got 10 or 15 people coming into our office with all their income docs, pre-qualifying them, and we're sending them out with our realtor partners to go find houses. So, I think you can close 10 loans off a $6,500 mailer. So if you do the math, it's $650 per closed loan in marketing costs. The exciting thing about this program is the size of the loan amounts, because a lot of these loans end up going, 100% VA or 96.5% FHA. Look at the average home price in your area. These loan amounts are big, a lot bigger than refinance loans. In California, we're pulling in $350,000, $400,000 purchase loans, and the loan amount almost matches the purchase price. So these are big loans that are highly profitable. Our average loan on a refinance might be, $180,000, $200,000. So, you're spending money, and you might not fund as many loans, but if they're twice the size, that can really be profitable. So, if you could do 10 loans for $3 million on a $6,500 mailer, I just think it's a great return on investment. And you can leverage these clients to maybe get in the door with more realtors, because now you've got something to bring your realtor partners. You've got pre-qualified leads that want to buy a house, and you're going to put some money in your realtor's pocket. They might reciprocate for the next 12 months, sending you more referrals if you're bringing them buyers and bringing them deals. So,
well, I'm going to throw it back over to Annie and have her talk a little bit more about just the power of being in a power position with real estate agents and how important the purchase market is to surviving and thriving in the mortgage industry in the next few years. Annie, do you want to just address the issue for those people that have been, kind of camping out in the refi market, and just why this is such an important strategy to really get them out there and start building some of those purchase referral relationships?
Oh, absolutely. And I'm a big supporter of the purchase brokers and the purchase market in a whole. When the refis were going crazy and streamlines, those were gravy. The purchase market is definitely where it's at. And lenders like myself, if you're smart, you're doing credit approvals for the brokers and for the realtors so that a borrower can actually be fully approved before they even start looking for a home. To me, that's the key to being successful in the purchase market. You have a buyer walk into your office, whether you're a broker or a realtor working with a broker, you send them and get them credit approved up to whatever sales price, and then you shop. To me, doing it the old-fashioned way where you shop first is doing it backwards. In this day and age with so many overlays and so many different factors to consider in every loan, it's really important that the borrower know right up front what they're going to need to provide, what kind of income the underwriter is going to say they make, because we all know it's not the same as what they say they make. Numbers are just crunched differently on my end of things. So yes, to me, today purchase market is key, and getting the borrower approved first and meeting with the borrower, getting all of their income information and their asset information is the way to start the transaction.
Thanks, Annie. And I think that there's another angle on this, and this is for the rebels of the world that really want to say, I don't want to work with real estate agents. I want to own the entire transaction. And Jeff, you've got a couple of mortgage marketing clients that are saying, hey, I want to capture up to 8% on a transaction. And if you want to go ahead and walk us through some of the strategies that they've been doing, I think that that'd be very interesting for some of the people that are on the webinar today.
So a lot of mortgage companies also own real estate companies, or the loan officer might have their real estate license. And, there's an opportunity to send out these letters and bring the borrower in, pre-qualify them. And let's say you plan on doing the loan and you're going to make 2% your comp plan on the loan. But then you represent these buyers as their realtor, and you pick up the 3% buyer's commission. So now you're at 5% commission on a, $200,000, $300,000, $400,000 deal. One deal that you close on this mail campaign is going to be highly profitable. I really think we can close, 3, 4, 5 deals and maybe double into transaction for the, loan commission and the real estate commission if you're in a position to do that. Or, you start putting $10,000 commissions in your realtor's pockets. I don't think it would be uncalled for to ask them to pay for part of the mailing, half the mailing. I mean, the real estate commission is bigger than the loan commission on these things. There's another idea that I can do a mailing to try to pick up listings. We can mail non-owner occupied properties. We can mail people that have been in the home for 3 to 5 years. That's typically when someone decides that they're leaving. So there's some possibilities of doing a mailing to get listings, then do the buyer mailer, and now you can pick up all 3 commissions. Represent the buyer, represent the seller, and then do the loan. And if you can make 3 and 3 and 2, 8% commission on a $300,000-$400,000 transaction, you could see where, I think somebody could make $100,000 on a $6,500 direct mail campaign if they can include and position themselves right to be able to do all of it. But even if it's just the loan, there's a lot of money in this thing. So it looks like, there's another slide we have up now. So I'm doing a lot of purchase marketing because we've been forced to. I mean, refinances have been great and easy, and I mail 1 million pieces a month for refinance, and I'm still doing it, and we still have some things working. So if you're not convinced you want to go out and direct mail for purchase and work with realtors and build that side of your business, there are some things with refinancing that are still working, and I just wanted to run through a couple quick ideas with you if you want to do some mail and get some calls coming in for refis. There's a lot of FHA borrowers out there paying high rates and high mortgage insurance, that now have 20% equity in their property, so you can actually mail to them and take them out of an FHA loan, put them in conventional. You might not be able to save them a ton of money on rate, maybe only 1% or 0.5%, but if you get them out of their mortgage insurance, it's a pretty big number, and it makes a lot of sense for them to refinance. So we've got mailing lists of high-rate FHA borrowers paying MI, and we have an AVM run on our database so we know the basic value of the house and what they owe on it, so we can market to FHA borrowers that have enough equity to refi. And I've done probably 30 of these campaigns pretty successful over the last 90 days. So we have refinance for FHA. There's still some opportunities with HARP. I mean, rates went down a little bit in the last week, so we can sell HARP loans at 4%, 4.25%. And there's a lot of non-owner occupied Fannie Mae owned mortgages out there that haven't been saturated with mail that you can refinance some non-owner occupied Fannie Mae owned mortgages. And those people are paying 6.5%, 6.75% rates, so you can take them down into the high 4s and still save them a lot of money. So got to get a little more creative right now with rates being higher on who can benefit from a refi. We have a few lists out there that are still pulling well and good conversion. People that are in adjustable rate loans. We've been mailing to people that opened a loan in the last 1 to 10 years adjustable that might want to get fixed right now because they're seeing rates go up. We have some data. There's people that are in a 30-year loan that was interest only for the first 10 years, and they're getting ready to convert to a 20-year amortization. So not only are they losing their interest only feature for their payment, they're going to be amortized over 20 years, so their payment's going from $2,000 a month to $4,000 a month. Those people have to refinance, or they're going to be in deep trouble. So there's some good opportunities out there for some refi mail if somebody wants to do that. The cash out, there's a lot of people that have equity in their home just in the last year. They want to make home improvements. They want to pay off some credit cards. Again, they might have a 4.25% rate, and you're going to take them right back to 4.25%. But if you hand them $20,000 to pay off credit cards or to remodel their kitchen, there's a lot of need for for cash, and people want that. So we're getting a big response on the cash out mailers we're doing to people between 60 and 80% LTV.
Well, I'm going to throw it back over to Annie. Annie, just talk a little bit more about some of the refi market that's still out there, and maybe just edify some of the things that Jeff just said in terms of your actual experience in working with brokers around the country.
Well, our PRMG is a nationwide company, and we're approved in, I think we're somewhere around 25 states, 28 states, and I believe you have a list of that. I personally do loans only in California, but I have seen a lot of refis still coming in the door. Because the values are rising, then you increasingly have a number of borrowers who now qualify for a refinance, even if they're going to do, as David was talking about getting rid of the MI, the MIP or the PMI. A lot of these borrowers just are reducing their rate and keeping that. They're going FHA. They can still do a 97% FHA rate and term, but increasingly we're seeing a lot of borrowers having now just enough equity to do that instead of being underwater. And the refi market is still out there, and it's still going along, and as far as the rates go, they're holding tight. And 4%, let's face it, still is a great rate. We're all used to the 3s, but 4% is still an awesome rate.
That's great. Well, I've got a poll up here. I know that people are getting antsy to know more about how to get started on marketing, and so I'm going to bring Jeff back on here and finalize the presentation portion of this, and then we'll get to some of the live Q&A. But Jeff, if you want to just go through these last final letters and then just talk about the simple steps that the people that are on the webinar today or the ones that are watching the recording can take to start getting their phones to ring.
Yeah, so some of the letters, I'm not seeing them on the screen yet. The poll's still up, but I think we're showing some of the direct mail letters that we send out for purchase, for the non-owner occupied HARP campaigns that have been really successful, our FHA conversion letters. So if somebody wants to try to find a way to get 50 to 100 phone calls into their office in the next 30 days, whether it be for purchase, refi, I'll show you all the different campaigns that I'm having success with. Best thing to do is probably email me. Let me know what particular campaign you're the most interested in and what counties or states you might be interested in mailing, and I'll run the numbers for you on our database, find out how many people we have in your market area so we can kind of get an idea of what lists we might be mailing. I'll send you sample mail pieces that have been successful in that particular niche, and you can have a few to look at, and we can set up a time for a conference call to go through all the details. So you can call me, but maybe best to email me with what your interest is and which product, and I'll send you counts and letters and pricing, send you some testimonials, references you can call, and kind of go from there.
Here's the letters coming up right now.
Yeah, so our FHA conversion letter, we estimate what they're currently paying based on the average interest rate for the month and year they're loan funded. And then we know the exact mortgage insurance they're paying. We've got the mortgage insurance factor built into our database. So we show an old payment, and we show the new payment with a refinance. This one's at 4 1/4, and you're going to save $500 a month, $6,000 a year, reduce your mortgage payment by $6,100 a year. So all these letters are personalized with their loan amount, their rate, their MI factored with a new payment. This is the HARP letter for non-owner occupied, just talking about even if your non-owner occupied property qualifies for HARP if it's Fannie Mae owned. And we have Fannie Mae lists of 100% guaranteed that Fannie Mae owns the mortgage. We're one of the only companies that can offer that. So we can mail Fannie Mae borrowers, talk about even if you're upside down. Again, these non-owner occupied people are paying 6.5% on average, so you're going to take them down to, maybe 4.5%, high 4s, maybe with the hits to non-owner rates. But that's been real successful. This is one of our letters. And then the process, like I said, email or call me. Pick out your letter, pick out the data, the county, states we're going to mail. You approve the letter. We send you a copy of the database that we're going to mail to, so you see who we're mailing your letters to. Takes about a week to get the R work done and print and mail it, and then it takes 1 to 2 weeks to get there, depending on what state you're in. And again, $6,500, 50 to 100 phone calls. Our minimum order is actually 5,000 mailers for around $3,500. I think it's $3,750 for the bankruptcy list, because that mailing list is a little more expensive if you're talking, HUD back to work purchase marketing, and you want to mail bankruptcies that discharged in the last 12 to 36 months that are going to respond to this offer. So $3,500, kind of a minimum order for 5,000 letters if somebody wanted to try it, and kind of go from there.
Well, thanks so much, Jeff. And we're going to finish up with some Q&A. And right now I'm going to throw it back over to Annie Gotch from PRMG, and she's going to share just some of her insights in terms of the top 5 questions that she typically gets on the Back to Work program. And then I'll submit some of the questions that were submitted using the GoToWebinar control panel. So the first issue that we want to talk about, Annie, is just eligibility issues. What is that, that killer in the deal that just makes it not work, or is there anything specific that you could share on eligibility?
Yes, the main thing is that it was caused by an economic event, meaning loss of job, loss of hours, loss of income due to that circumstance. Nothing else. It's not based on if they had a medical issue. HUD does recognize those, but not in this specific program.
And the checklist that you provided, or that you're going to send out to everybody after the webinar, that is the crucial thing that you're talking about, making sure that they do utilize that. But talk a little bit more about documentation, or what are some of the things that they can be kind of preparing their clients for?
Well, first, documentation, I believe, is the strongest thing, is to document the loss of the hours or the job through a VOE, verification of employment, reduction in hours via a letter from HR, if they're currently with the company, and then verify that their hours are now back to increased, or their days are back to increased. As I know several friends of mine actually had a reduction, went down to 3.5-day weeks as opposed to 5. Now you just document they're back to 5, and you've got your documentation as far as the economic event.
Just in terms of what Jeff said earlier, that some people are a little bit shy about jumping into this new niche, but what are you seeing out there in the marketplace? I mean, who's jumping in the game and submitting loans on this particular program? Have you seen some increased action from some of your key brokers?
We actually have, and I do believe that this is actually a very good way to, with Jeff's help in marketing for this, in getting clients in the door. And it's a fully, reputable program, so you can offer it to them. And if they can't do it, then again, this is a way that you have a client now in the door. You're trying to help them. And yes, I've seen a lot of increased activity. A lot of my brokers have my back-to-work checklist, and they have my 3-page summary. And it helps them in talking to borrowers because they've opened up a whole new door.
Well, I'm going to throw it back to Jeff. I did have a marketing question that was specific to data. And Jeff, would you just clarify a little bit more about the quality of the data? One of the participants, Ted, says, he's underneath the opinion that the data is a little bit hard to come by since many of the demographic addresses are inconsistent and that they've moved on. Can you address that issue? And then there's a couple other questions regarding exclusivity of data. And once they were to purchase data from you, do you sell it to a lot of other people?
So 2 good questions. I mean, I have mailed millions of letters to bankruptcy data from the courthouse for 10 years, mostly for my car dealer clients who market bankruptcies right after they discharge. They typically need a car. So my car dealer clients have been mailing this bankruptcy list for years with great success. So I know I've got good names, I've got good addresses. Obviously the list is pretty crucial in making the direct mail campaign work. So we run it through the national change of address, so if they moved after their bankruptcy, which is real common, as long as they filled out a national change of address with the post office, we have their current address. So our lists are pretty clean. I mean, nothing's perfect, but 95% accuracy and deliverability on your list. You get a few hundred out of 10,000 that come back, undeliverable, and that's just, the cost of doing business with direct mail. Nothing's perfect, but we have great lists. If you decide to do a mailing with me, we give you a 90-day exclusive on that data. So I'm not going to take 2 mortgage companies and mail the same letter to the same data and just, cut my client's throat, so to speak. I mean, I want to make sure you get a good response, because if you do and you fund 5 or 10 extra loans, good chance you're going to want to do it again with me next month. So we're real careful to give exclusivity on the list. Once we buy it and mail it, you have 90 days on that list before we'd open it up to be able to be sold to somebody else. So. And these lists change all the time with addresses, so we, buy a fresh list for each one of our clients. We don't go back and use old lists where they might have moved and the addresses would be bad. Something I want to mention too, Dave, you had just brought up a good point about a lot of people not wanting to move on this because it's so new. I remember when HARP 2.0 came out back in April of last year, and I'd have like 100 clients call me and talk about mailing, and it seemed like maybe 10 of them would say, okay, I know this thing's new, but I know the loan program's there, and some people are going to qualify. So they'd spend $6,500 mailing with me on a 10,000-piece mailer. The guys that jumped into this first were getting 100 to 200 inbound phone calls, closing 10 to 30 loans off a $6,500 mailer. And they absolutely killed it. And then here it is a year later, and there's clients finally deciding to move on this thing. And now if you mail 10,000 letters for an owner-occupied HARP campaign, you're going to be lucky if you get 20 phone calls compared to 200. So if you wait until the program's totally proven and everyone's funding loans, you're going to miss out on the big response and making a lot of money because you jump in there, when it's new and quick. You want to make sure you have this loan program to fund, obviously, before you spend money on a mailer. But if you're waiting for all the the wrinkles to come out of the close, you're just never going to make as much money as the guys that jump on it when it's new from a marketing standpoint,
Well, thanks so much, Jeff. And Annie, and just in terms of pricing and overlays and rates, can you just touch on that? I've got your contact information and the states that you're approved to lend in. Is there anything else that you want to add just in terms of pricing and overlays?
Yes. As far as pricing goes and rates, the great thing about this program is it's exactly the same as a regular FHA loan. There is no extra hit to do the Back to Work Initiative program. There are no extra overlays except, of course, documenting the economic event and my biggest thing, which is completing the home buyers counseling prior to going into contract. Other than that, there's really nothing that is different with this as far as pricing or rates.
Great, thanks so much. And just a couple housekeeping type of questions. There were some people that asked about is Overflow Works part of PRMG? No, they're two distinguishedly different companies, and the only reason why Annie Gotch from PRMG is on this webinar is because of her expertise in the mortgage industry and her reliability and quality of service from some of the numerous brokers that have recommended her in terms of Jeff's partnership with just an expert in the field. So Annie, thanks so much for sharing your wisdom with us today. We really appreciate having you.
Thank you so much for having me.
And for those of you that want to get started on marketing and generating some more incoming calls, Jeff Bush's organization, overflowworks.com, is the place to go. A quick email to Jeff Bush at overflowworks.com will get you your fastest response, or give Jeff's organization a shout at 800-784-5194. Thanks so much, Jeff, for being on the call. Any final comments you want to share?
You know, if they're interested, they can send me an email, and I will send them the slides from this webinar, because there's some great information in here, both from the lender from PRMG, who jumped on this thing early and is already funding these loans. Part of the reason we invited them on the call, they jumped on this early, and they're being pretty aggressive with it. All the lenders out there are looking at this and starting to roll it out, but some are just been quicker than others. But if they want, you know, sample letters, counts, you know, just send me an email, and I will reply back and give you copies of these slides. And that includes all these samples. I'll run counts on your market area, and we can do some business.
Great. Thanks, everybody, and have a great day.
Thanks.